Welcome back to the channel. Today, we are breaking down the latest earnings results and future growth trajectory for ServiceNow, a dominant leader in the enterprise software and digital workflow space. With the stock navigating critical technical levels and analysts providing fresh multi-year forecasts, there is a lot for now investors to understand. Before we dive into the specific charts and data tables, please like this video and subscribe to the channel for more institutional-grade market analysis. Let's get into the report. We begin with ServiceNow's current market standing on the NASDAQ. As of the latest reporting, Now is trading at $108.01, marking a decline of 1.18% on the day. The chart highlights a period of significant pressure, with the stock currently sitting near the very bottom of its 52-week range, which runs from $98 up to $211.48. With a massive trading volume of over 19 million shares, the stock is seeing intense activity as investors process the latest financial data. This market snapshot provides the essential context as we transition from price action into the fundamental earnings and forecast data. Understanding where the stock currently sits relative to its yearly highs and lows is vital as we evaluate whether ServiceNow can find a floor at these levels or if the current downward trend will persist through the 2026 fiscal year. Turning to the earnings per share chart, we see a company that has maintained an impressive streak of consistent performance. The dark blue bars represent estimated EPS, while the light blue bars show actual reported figures. For every single quarter in 2025, ServiceNow has delivered a definitive beat over analyst expectations. This trend of outperformance is a powerful signal of operational efficiency and the successful scaling of its enterprise platform. Looking ahead into 2026, the forecast bars show a steady upward staircase, with estimates climbing from 0.5 in the first quarter toward a high of 0.7 by year end. This projected growth suggests that despite the recent share price volatility, professional analysts expect ServiceNow to continue expanding its profitability as it integrates more AI-driven automation into its workflow solutions. The visual consistency of the 2025 beats and the rising 2026 bars provides a robust fundamental foundation for the company's long-term growth narrative. The earnings surprise table quantifies exactly how much ServiceNow has outperformed analyst expectations over the last year. For the most recent quarter ending December 2025, the company reported an EPS of 0.52 versus a consensus of 0.48, resulting in an 8.33% positive surprise. While impressive, the prior quarters were even more explosive. In September 2025, ServiceNow delivered a 25.53% surprise, and the June quarter saw a massive 29.41% beat. The year started with a solid 15% surprise in March. These figures highlight a powerful beat and raise cycle that has largely supported the company's valuation. Consistent positive surprises of this magnitude are critical for building institutional confidence as they force analysts to repeatedly move their goalposts higher. This history of execution is a key point of analysis for investors evaluating the company's ability to navigate the upcoming 2026 fiscal year. Looking ahead to the quarterly earnings forecast, we see the specific targets analysts have established for the next several quarters. For the quarter ending March 2026, the consensus EPS forecast is 0.54, based on 12 separate analyst estimates. The high-end forecast reaches 0.58, while the low end is at 0.4. As we move through the year, the consensus rises to 0.7 in September and reaches 0.1 by December 2026. Notably, the revision data shows active sentiment. The December 2026 quarter has seen 3 upward revisions in the last month. The high number of estimates for each period ensures that these consensus figures are a well-vetted representation of professional market expectations. The steady upward climb in quarterly projections through 2026 indicates a fundamental belief among analysts that ServiceNow's growth engine remains strong, providing a high confidence baseline for the company's near-term earnings potential as it continues to scale its cloud services. The long-term yearly earnings forecast paints a picture of exceptional profit scaling for ServiceNow. For the fiscal year ending December 2026, 17 analysts have converged on a consensus EPS of 2.48. Looking further out, the growth is projected to continue its sharp upward march. 3.11 for 2027 and 4.03 for 2028. This represents a near doubling of annual earnings per share in just 3 fiscal years. Within this group, sentiment is highly positive for the 2026 period, with 11 upward revisions in the last month against only 1 downward move. The high-end estimate for 2027 of $3.28 suggests that some analysts see significant potential for the company to scale its profitability even faster than the current consensus indicates. This multi-year data is vital for long-term investors, as it shows that Wall Street expects ServiceNow to consistently compound its earnings as digital workflow automation becomes an increasingly central part of global enterprise infrastructure spend. The change in consensus chart visually tracks the stability of analyst expectations over the past month. For both the full fiscal year end December 2026 and the upcoming March quarter, the bars remain remarkably flat. Comparing current estimates to those from 1 month and 1 week ago, we see almost no variation in the height of the bars. This visual consistency confirms that recent market developments and the latest earnings data have been integrated into analyst models without triggering any major shifts in the consensus targets. While there isn't a surge in positive momentum driving the bars higher at the moment, there is also an absence of significant negative momentum pulling them down. This stability indicates a period of established equilibrium where the market is currently satisfied with the existing projections. For investors, this plateau in the consensus suggests that the current stock price is largely reflecting these stable earnings expectations, and the next major move will likely depend on the company's ability to deliver a surprise in the upcoming reports. The estimate momentum summary provides the final layer of detail behind these shifts. For the fiscal quarter ending March 2026, the consensus EPS forecast rose from 0.52 to 0.54 over the past month, a 3.85% increase. For the full fiscal year ending December 2026, the consensus has climbed from 2.37 to 2.48, a 4% increase. The summary notes that for the yearly forecasts, 11 analysts raised their targets while only 1 lowered them. This confirms that the net movement is definitively positive for both the near term and the full year. Estimate momentum is often a leading indicator for stock performance, and the current upward trend suggests that the professional community is growing increasingly bullish on ServiceNow's ability to outperform its previous targets. These percentage increases in EPS numbers represent significant shifts in expected total profitability, providing a strong signal of analyst conviction as we move deeper into the 2026 fiscal year. Finally, we look at the raw tally of the number of estimates changed to confirm the breadth of this positive sentiment. The data is heavily skewed to the upside. For the full 2026 fiscal year, 11 analysts moved their targets up, while only 1 moved them down. This overwhelming ratio of upward revisions among the 17 analysts covering the full year is a powerful signal of market agreement. For the March 2026 quarter, the conviction is also strong, with 6 upward moves against 1 downward adjustment. This concentration of positive revisions indicates a broad consensus that ServiceNow is positioned for continued outperformance. When the majority of professionals studying a high-growth tech leader are simultaneously raising their bars, it creates a significant support level for the stock's valuation. This tally serves as a final confirmation of the bullish approach being taken by Wall Street as they look toward the company's performance in the 2026 fiscal year. The alignment of these professional expectations provides a solid foundation of confidence for investors. In conclusion, ServiceNow Group's latest data points to a company with powerful historical execution and an exceptionally strong multi-year growth trajectory through 2028. While the stock has faced near-term price pressure, the analyst community remains increasingly bullish, highlighted by the wave of upward EPS revisions. ServiceNow continues to prove its ability to scale profitability in the enterprise cloud sector, and its consistent earnings beats provide a high degree of confidence for long-term investors. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on ServiceNow and the broader markets. We'll see you in the next analysis.